All right. Well, folks, hello and welcome back to the Money Wisdom Podcast powered by Johnson Brunetti. We're glad you're with us. I'm your host, Nick Colantuono. I'm a certified financial planner up here in our Boston, Massachusetts offices. We're glad you're all back with us because we've got an awesome episode for you today. Today's episode is all about the 5 must-know Social Security rules before you file. And folks, I cannot overstate the fact that Social Security is probably one of the biggest financial decisions that a lot of our clients will ever be faced with. Let's face it, you've worked 20, 30, 40 plus years saving, paying taxes, putting money into the Social Security system, and now it's your time to reap the benefits of all those contributions and all the working and the earning and the saving that you've been doing into that plan. So without fail, a lot of the folks are coming in, and when they're having these initial questions with whether it's myself or someone else on the team here at Johnson Brunetti about, how to navigate this next phase of life, as I mentioned, without fail, Social Security is often one of those fundamental conversations that we have to address. So let's talk about it, because the reality is it's confusing. There's a lot of different options. You can file early, you can file late, you can do the old spousal benefit, right? You can go online, you can read 15 different articles that are going to say you should always file early and take the money as soon as possible. You could read another 15, 20 articles that are going to say no matter what you should do, you should always wait as long as possible, wait till 70. I've been doing this almost 16, 17 years as an advisor, and I will tell you folks, you should never do anything that starts with the words, you should always. What you should always do is make sure that you've got somewhere to go, someone you're working with to give you advice that's tailored to you. Because the reality is you can call the Social Security Administration. And I believe last time I checked, there was something like 340 different ways that you can be filing for Social Security. So all I'm getting at, folks, have a conversation. Talk with your advisor. Make sure you're having a conversation and you're putting a plan in place that is specific to you and your earnings records and your income needs and the situation that you might have, whether you're single, whether you're widowed, or whether you're married and you're trying to address this with a spouse. So the first thing we're going to talk about here is just how benefits are calculated. Because let's face it, it can be confusing. And like I said, you've been working 20, 30, 40 plus years. Maybe you started working when you were 18. And now you're 66 years old and you're trying to figure out, I look at this number on my Social Security report and, how did they come up with that $2,400 or $2,500 a month number? Well, here it is, folks. The way it works is your Social Security benefit is based on your highest 35 years of earnings. So keep in mind, if you haven't worked 35 years, because again, the rules to be eligible for Social Security are you have to work about 10 years. You need 40 quarters. This is probably rings a bell for a lot of people. So the way it works is they take your highest 35 years of earnings and then they average out the income over that 35-year period. Obviously, there's career growth, there's career development, there are pay raises, right? There's adjustments for inflation, right? Maybe you leave one company and go to another and you get a big jump. Right. So again, your income is certainly going to vary over a 35-year working career. So in order to compensate for that or adjust for it from a Social Security standpoint, they just take the average of those 35 years. That is how they determine what your benefit is going to be. So again, it's important to just know, how are they determining this, right? Oftentimes, as we're meeting with folks who are in those later years of working, let's say they're 62 right now, but they're not planning on retiring until 66 or 67. Well, that's still 5 more years where in theory, the later you are in your career, maybe those are your higher earning income years. So it can be really powerful working that additional 5 years because what does that do? Well, it increases your average earnings over that 35-year period. Because by working another 2 or 3 years, you're knocking off the first 2 or 3 years of that 35-year calculation that can be dragging down your average income amount. So I know I just threw a lot at you, folks. I know this is confusing. This is why we do what we do. Come in, have a conversation. We'll help you navigate all this. Now, number 2, the second thing you all need to be mindful of is, well, when can you claim? And again, the way it works is everybody who is eligible for Social Security or everybody paying into the Social Security system has an age that is determined to be their full retirement age. For myself, it's 67. For a lot of our clients, maybe it's 66 and 8 months, 66 and 10 months. For some of our clients, it is 67, right? So there's a certain point in time in which you become eligible for your full retirement age benefit. Keep in mind the rules when filing for Social Security. The earliest you can file is age 62. Right now, again, disclaimer here, there are certain scenarios where you could be eligible to claim Social Security benefits prior to 62, right? This is often the case if there's a deceased spouse or disability benefits, things along those lines. But for most folks, you can get it as early as 62. You can wait until your full retirement age. So let's call that kind of somewhere in the middle, right? 66 and 8 months, 66 and 10 months, 67 for some of our younger viewers and listeners. And then you can wait as long as possible and claim at age 70. Now, keep in mind, you can't get it before 62 and you can't get it after 70. So it's either, those are kind of the bookends, and you can get it anywhere in between. So the rule of thumb, folks, and this is something that I typically swear by for my clients and the folks that I'm giving advice and guidance to when it comes to Social Security, it's income. And if there's a point where you need income, you have to ask yourself, is this money I want to be taking from my own pocket or my own assets, or is this money that I now want to start receiving from the government, from the Social Security Administration? So I have a very hard time, and I know a lot of our advisors are of this mindset, and it's in line with our philosophy as a firm, I would say. But I'm a big believer in taking Social Security as early as you need it, if it doesn't result in being penalized for doing so. Now, keep in mind, if you're working and you have positive cash flow, well, okay, you don't need Social Security, right? Your income needs are being met from your paycheck, from your income, from your employment. So if you're working, it's very hard for me to recommend that you then begin collecting Social Security in addition to that income that you have. All right, think about what I just said earlier, where the longer you work, the longer you defer your Social Security, the more years of earnings record goes towards your benefit, right? So again, why start collecting if you're still working, and those years of earnings could in theory be creating a higher benefit for you in the future? Also, it's worth mentioning, the longer you wait, right, your income benefit from Social Security will actually increase as you delay receiving benefits. So as long as you're working, it probably doesn't make sense to take Social Security. Keep putting money into Social Security. Get those early years of low income earnings off of your record, and continue to delay your benefit, which means you're then going to be filing at a later age, which means higher income for the rest of your life. Right? So you could take it as early as 62. You could take it anywhere in between. You could take it as late as 70. Now, the importance of your full retirement age. Let's just use myself as an example, 67. The importance there is that if I were working while collecting my Social Security benefit prior to my full retirement age of 67, so example, let's say I'm 65 and I'm still working, but I want to collect my Social Security benefit. Well, depending on what my earned income is, what my employment income is, that can actually result in a reduction of the income that I receive from my Social Security. The reason they do this is because they want to incentivize people to continue to work and continue to save, and as a result, defer the Social Security, right? There's no secret when it comes to the stress that our Social Security system is under right now. So there's a big push by the administration to try to come up with ways to incentivize people to delay taking their benefit. And that's where, again, if you are not yet full retirement age, continuing to work and collecting your benefit, that's where you could see a penalty and an actual reduction in the money that you're getting from Social Security. That rule, that income restriction or income reduction on your benefit, that actually goes away once you reach your full retirement age. So let's think about this on the flip side and say I am over my full retirement age. Let's say I'm 69 and I still plan on continuing to work, but my full retirement age benefit at Social Security was based on my age 67. I can still continue to work, earn as much money as I want. And even though I'm still working, although I'm collecting my Social Security benefit, it's not going to be impacted by my income. Now, what will be impacted by my income is the tax rate that gets assessed on Social Security. So it's very important to know, at least here in the state of Massachusetts, and I know in Connecticut is somewhat similar. Massachusetts residents do not pay state income tax on their Social Security, but it is still counted as income for the sake of your federal tax bracket, right? So we need to be mindful of this when we're planning for income in retirement. And as I said earlier, my rule of thumb with Social Security, take it as early as you need it if it doesn't result in being penalized for doing it. So very rarely will I recommend clients begin collecting their Social Security while they're still working, because that often means they don't, quote, need the Social Security. Now, again, in retirement, you could have all the money in the world in your retirement accounts or the bank or your checking accounts or cash, and you could say, well, Nick, I don't need my Social Security. But you need money from somewhere, right? And I'm a big believer in taking the money and running, right? Take the money from the Social Security Administration, because what it means is instead of having to take $5,000 or $6,000 a month to meet your living expenses out of your 401ks or your IRAs or cash in the bank, i.e. other accounts that can be working harder for you, that can provide you with more flexibility and control. And oh yeah, that can also be left behind in the event of something happening to you. Because think about Social Security. You take your Social Security and you pass away and that money's gone, right? Social Security stops. So whenever we're trying to replace paychecks for our clients, generate income for our clients, we have to ask ourselves, where is the most tax efficient place to go to get that money? Where is the most market efficient place to go to get that money, right? What options, as far as the buckets that you have, provides you with the most flexibility and control? And what we often find is that allowing the other assets, the savings, the checkings, the retirement accounts, the IRAs, allowing that money to keep working hard for you and also be there for your family, God forbid if anything were to happen to you. A lot of people just like the idea of you stop working, take Social Security, right? At least that's going to make up some chunk of the income need that you have each and every month. And then if you need money above and beyond that, well, that's where all that other stuff can come into play. So these are big, big conversations that you need to have. So I sort of touched on two of the topics there, right? The first thing we talked about was how the benefits are created, or how they're calculated rather. What we also just discussed was not only when to claim, how early, how late, full retirement age, but also claiming while continuing to work, why you would, maybe why you wouldn't, and how your benefits are impacted as a result. I also want to touch now on spousal and survivorship benefits. Now, again, if you are married and filing for Social Security, your benefit can actually be adjusted based on a spouse's earnings record. I think of my wife, Julia, and I, right? We, our earnings are in two different ballparks, right? Julia, we're fortunate enough, she can be home with the kids, right? Her job or her role in our family is not necessarily to bring in income to the household. It's to be, there kind of taking care of and responsible for our kids at this very sort of fragile phase of life for them, right? My son Jordan is 4, my daughter Laura is 5.5. So for us to have Julia be home with the kids is critical, right? It's critical at this age. But what we also realize is that means that Julia is not in a position where she's working and paying into Social Security. The Social Security system is also aware that it takes two to tango in the type of scenario we have. I'm working, I'm earning, I'm putting money into Social Security. My wife right now is not. But that's not going to impact her Social Security benefit in the long run in a huge amount. And what I mean by that is she will actually be eligible, if it turns out to be the case, where come time for Social Security, if her benefit is less than half of mine, hers will automatically jump up to equal half of my benefit. This is called a spousal benefit. Now, the rules, or I guess the caveat for being eligible for that spousal benefit is you have to be spouse, you have to be married. And then one of you will get an adjustment in income based off of whoever has the higher earnings records. This could also be the case for a separation. Right? We obviously meet with people who are in a phase of life where they've gone through a separation. And although there could be a discrepancy there, or now that they're a single tax filer, they're looking at their Social Security, which is based on their earnings record, and it could be quite low. If their ex-spouse is in that same scenario where half of their benefit is higher than the one that they're eligible to be able to receive, that filer will get a benefit that's equal to half of their ex's benefit. So this can all be very confusing, folks. I am well aware of how confusing this might be. So call in, have a conversation, reach out to your advisor, make sure whoever you're getting advice and guidance from when it comes to this is an expert in this stuff, because it's a lot. I'm aware that it's a lot, and a lot gets thrown at you, and some very difficult decisions have to be made. And we've already touched on how benefits can be taxed. Again, it's all based on income. So the way it works is they look at what's called modified adjusted gross income, and that can lead to up to 85% of your benefits being taxed at the federal level. So keep in mind, the first 15% of your Social Security income is not taxable. That's awesome. The money above and beyond that is what then gets subject to those federal tax brackets. And the rate at which, or I guess the percentage of which hits your tax bracket, is based on that modified adjusted gross income level. So you have to be mindful. Here in Massachusetts, no state income tax on Social Security. In Connecticut, I know it's a little bit of a bracketed range there. But as far as the federal level, the first 15% of your Social Security, not taxable at the federal level. The next 85%, well, that depends. You can either pay taxes on none of your Social Security, you can either pay taxes on 50% of your Social Security, or you can pay taxes on up to 85% of your Social Security. So folks, believe me, I know a lot gets thrown at you. If you're listening to this podcast saying, man, Nick just, he's talking about a lot. I can tell he knows what he's talking about, but that podcast just kind of confused me a little bit. I get it. Believe me, I get it. And we aim to make this stuff as simple as possible. And, the reality is we're working with folks over a 5 to 10 year period in some cases, helping them navigate this single transition that they have to make to collecting Social Security. So you can't expect me for a 15-minute podcast to be, one, talking about all of it, but two, talking about the specifics of you. That's where our offer comes into play. We want everybody listening to get their copy of our Social Security Decisions Guide. It's a free resource that we want everybody viewing, everybody listening to get their hands on. So if this is a phase of life that you're trying to navigate and you have some questions regarding how, when, what are my strategies, text the word social, SOCIAL. Text the word social to us at 800-757-0436, and we'll send you your free copy of the Social Security Decisions Guide. Again, text the word social, SOCIAL. Text it to us, 800-757-0436. We will get you your free Social Security Decisions Guide. These are big, big financial decisions, folks, and frankly, some of the biggest that you'll ever be faced with. I know there's a lot of places to go to get advice when it comes to this type of stuff. So make sure that you're getting advice that's tailored to you. That Social Security Decisions Guide is a great place to start that process. Now, last, I want to touch quickly on some of our mailbag questions. I know I got a little deep into the content on that first section, so I'm sorry if this part feels rushed, but hopefully it'll help me keep these answers to a minute. So our first question here is awesome. This is actually from Mark in Newton. He says, Nick, is there any way I can leave or transfer my Social Security to my only daughter? My spouse is no longer with us. Well, Mark, I'm very sorry to hear about the loss of your spouse. This is a common question. Unfortunately, Social Security survivorship benefits are only for spousal support. So to answer your question, Mark, the answer here is no. Social Security will pay your daughter a very small survivor benefit. It's almost like a death benefit. We're talking a couple $100, right? So nothing significant. As far as the income you receive from Social Security, that will stop when you stop. So I'm sorry to deliver that news. Our next question. This is from Renee out in Franklin. Actually, Renee and Sean out in Franklin. Our next question focuses on pensions and Social Security rules before you retire. I'm a teacher. I'm hoping to retire in 4 years with 16 years of service, right? So into her teacher's pension. What information should I know about my pension and my Social Security? Well, because you have a teacher pension, you have not been paying into Social Security with that teacher's pension benefit. So again, federal pensions. I know there were some rule changes here, so I have to be careful with how I answer this. But I know the Massachusetts Teachers Retirement Board is separate and distinct from the Social Security system. So in this case, what she should know about her pension is one, well, great. It's good that you've been contributing to that pension. You're going to be eligible for pension income in retirement. That is awesome. Those benefits are very few and far between right now. So since you have that, it's fantastic. What I am curious about is, do you have earnings or an earnings record in the private sector? Because if you've been a teacher for 16 years, well, maybe you've been working for 30, right? So I'm curious about those other 15 years, because if you've been paying into the Social Security system, that would make you eligible for a benefit in addition to your teacher's pension from the Social Security system. So we want to be mindful of that. We really can't answer this question in this forum. This is where coming in and having a conversation would really serve you well. Finally, we have a great question here about taking benefits or filing for benefits while continuing to work. I am 61. I'm still working full time. What's the best time to start collecting Social Security? Well, this is a great question, right? Again, if you're 61 and continuing to work, fantastic. You can't claim your benefit until 62 at the earliest. But if you were still going to plan on working for another 5 or 6 years, I would consider waiting to collect your Social Security until you stop working. Again, going back to what I said earlier on this program is, take your Social Security as early as you need it, if it doesn't result in being penalized for doing it. Now, again, if this individual is still working, still able to save, they don't, quote, need their Social Security because they have income coming in from their employer. Once that income stops, well, that's green light, means go, start taking the benefit from Social Security. There are some scenarios where we may recommend taking it in advance or even further delaying it even after you retire. So folks, come in, have a conversation with either myself or someone on my team. Get your hands on that guide that we provide. Again, that Social Security Decisions Guide. This is as good a time as any to mention it. So again, text the word social, SOCIAL, text it to our team, 800-757-0436. We'll get you your complimentary copy, your free copy of our Social Security Decisions Guide. Because folks, as today's conversation lays out, a lot gets thrown at you. As I mentioned earlier, there's over 340 different ways to file for Social Security. Yet most folks go online, they read this article that says you should always take it at 62. They read another article that says you should always take it at 70. They talk to their, brother's, handyman who told them that they should always take it at 66 and a half or something like that. So again, folks, a lot gets thrown at you. These are some of the biggest financial decisions you'll ever be faced with. So get your hands on our Social Security's Decisions Guide. Once more, text the word social, SOCIAL, text it to our team. Again, that's social, SOCIAL. Text us, 800-757-0436. We will get you your free Social Security Decisions Guide. So folks, it's been an absolute pleasure. On behalf of myself and the team of our advisors and our planners here at Johnson Brunetti, we hope you got a lot of information out of this podcast. Frankly, I feel like maybe it was a little too much information. But again, it just shows the importance of having a plan in this next phase of life. So again, I'm Nick Colantuono. I'm a certified financial planner up here on our Boston, Massachusetts team of advisors. We appreciate you joining us as always on today's Money Wisdom podcast, and we'll see you next time.
Johnson Brunetti is a marketing name for the businesses of JB Capital and JN Financial. Investment advisory services offered through JB Capital LLC. Insurance products offered through JN Financial LLC.